By 2026, the way we invest is changing faster than ever. Traditional brokerages are being challenged by a new wave of AI-powered platforms, promising smarter trades, faster insights, and automated portfolio management. These platforms claim to remove human error, save time, and even predict market moves before they happen. But the big question is, are these AI brokerages truly worth your money, or are they risky experiments dressed as innovation? In this video, we'll take a deep dive into the pros, cons, fees, and risks of using AI-driven investing platforms. And I'll share my first-hand experience using some of the leading platforms over a month-long test. Investing has always involved trade-offs between risk, control, and time. AI brokerages promise to optimize all three. Instead of manually researching stocks, tracking trades, and making emotional decisions, the AI promises to handle complex analysis and even automate trades based on patterns in real time. For busy investors, that sounds revolutionary. But as I discovered during this experiment, the reality is far more nuanced. Some platforms genuinely enhance financial discipline and speed, while others introduce hidden risks and costs that can quietly erode gains. Understanding both sides is essential before trusting an AI with your money. The first thing to understand is what sets AI brokerages apart from traditional platforms. Unlike regular brokerages, where you make every trade manually and rely on your own research, AI brokerages analyze massive datasets, track global financial news, evaluate patterns, and even predict potential opportunities. Some platforms offer fully automated trading, while others provide recommendations you can approve. Fees can also differ dramatically. Some charge for access to advanced AI analytics, while others take a small cut of your gains. The promise is compelling: better informed trades, faster execution, and the ability to act on insights that most individual investors would never have time to process. But the efficiency of these systems depends entirely on the quality of the AI and the underlying data. Poor algorithms, incomplete data, or over-reliance on predictions can turn innovation into risk. During my month-long test, the benefits were immediately noticeable. Tasks that usually take hours, like analyzing earnings reports, scanning news sentiment, or identifying trade patterns, were handled instantly. The AI suggested potential trades I hadn't even considered, highlighted risk exposure in my portfolio, and automatically rebalanced assets to maintain diversification. For someone who struggles with emotional trading decisions, this was a major advantage. Decisions were more disciplined and data-driven, reducing impulsive moves caused by fear or greed. For new investors, AI brokerages acted like a guide, providing structured recommendations and simplifying complex market data into understandable insights. The overall convenience was undeniable. In many ways, it felt like having a financial analyst on call 24/7. But the advantages came with caveats. First, fees can be deceptively high. While some platforms advertise low commissions, many charge monthly subscriptions or a percentage of assets under management, which can add up over time. Second, not all AI predictions are accurate. During my trial, some suggested trades underperformed, and certain algorithms missed market anomalies entirely. Over-reliance on AI can create a false sense of security, leading investors to trust recommendations without independent verification. Third, automation can amplify mistakes. A wrong signal executed at scale can magnify losses faster than a human trader would typically react. Finally, AI platforms require a significant amount of personal financial data. This introduces privacy and cybersecurity concerns, as sensitive information is stored and processed on cloud servers. It's a trade-off between convenience and control, and understanding that balance is critical. Another major factor to consider is how fees and transparency are structured. Some platforms are upfront about subscription costs, while others include hidden fees tied to trade volume, margin usage, or premium analytics features. During my test, I noticed that platforms offering real-time predictive signals often charged more, and sometimes these signals didn't justify the additional cost. Transparency in how the AI makes decisions is rare, which can be unsettling for investors who want to understand the reasoning behind trades. This is not just a theoretical problem. Lack of transparency can lead to unexpected financial outcomes, especially for aggressive trading strategies. Beyond performance and fees, usability was a critical factor in my evaluation. The best AI brokerages integrated seamlessly into daily life, offering clear dashboards, actionable insights, and easy-to-understand recommendations. Poorly designed platforms, even with sophisticated algorithms, became overwhelming and stressful. Notifications were constant, charts were confusing, and the AI recommendations often contradicted my personal strategy or comfort level. In practice, usability proved just as important as algorithmic strength. A powerful AI that is difficult to interpret or follow can reduce confidence and increase the likelihood of mistakes. AI brokerages are not for everyone. They are best suited for investors who are comfortable with some level of risk, who understand that automation is not infallible, and who want to leverage AI to complement their research rather than replace it entirely. Beginners can benefit from structured guidance, but they must remain vigilant about fees and decision-making autonomy. Experienced traders may appreciate the speed and analytics, but should avoid blindly following automated trades without understanding the strategy. For everyone, the key is to use AI as a tool, not a crutch. After 30 days of using multiple AI brokerages, my conclusion is clear. AI-powered investing platforms can be incredibly useful when used wisely, but they also introduce risks that traditional investing doesn't. They save time, improve discipline, and offer insights that individual investors rarely access. However, fees, over-reliance on predictions, automation errors, and privacy concerns are real and should not be overlooked. The technology is promising, but success depends on the investor's understanding, skepticism, and ability to integrate AI responsibly into their strategy. AI brokerages are neither magic nor scam. They are sophisticated tools. Those who treat them as such may enhance their financial outcomes, while those who blindly follow hype risk losses and frustration. In 2026, AI investing platforms represent opportunity, but also caution. Understanding both sides is essential before committing your money. If this video gave you clarity about AI brokerages, smash that like button. It helps more viewers find grounded finance content. Subscribe if you want more experiments, reviews, and deep dives into AI tools, investing platforms, and market trends. Comment below and let me know. Have you tried an AI brokerage yet, and what was your experience? Share this video with someone who's considering jumping into AI-powered investing. It could save them time, money, and stress. More detailed finance breakdowns and AI experiments are coming soon, and the next one might completely change how you view automated investing.